Welcome to Blackbird episode number 33. My name is James, and today we are joined once again by Pavel, the full-time crypto trader. I asked Pavel to come back on to explain to me what's going on in the crypto markets right now. It has been a pretty volatile month, and a lot of commentators are still optimistic about the rest of the year. Some of them are pretty bearish about the rest of the year and for the time to come. So I just wanted to get Pavel's take on it. I know that it's probably a lot more nuanced than just Bitcoin to the moon or Bitcoin to the basement. And of course, then there's also all of the DeFi tokens and altcoins and Shiba Inu and all the other stuff that that's kind of been in the news or in the social milieu lately. So I wanted to get his take as sort of our resident crypto expert. Before we get into the interview, let me tell you once again about BU Enterprises. Juliet Nail, our favorite yoga instructor, mindfulness expert, et cetera, is still waiting for you, yes, you, the person listening to this, to drop her a line at buenterprises.com. BEYOU enterprises.com is your stop for online yoga and Pilates training. She'll even teach you how to stand up straight and breathe right and all that other stuff that you know you're doing wrong according to the way that your body is designed to work. So if you are ready to get back in touch with your physical body and your physical reality, get in touch with Juliet Nail. Once again, that's at buenterprises.com. And with that, here is my interview once again with our friend Pavel. All right, Pavel, welcome back to the show. Thanks for joining me.
Thanks for having me back, James. I'm really happy to be back.
Yeah, totally. So since the last time we talked on the podcast, you have become a crypto celebrity, joining Robbie the Fire Bernstein twice, right?
Yes, I've been in the King's presence twice now.
That's pretty cool.
Yes.
So this is your third appearance on my show. I couldn't let him beat me.
Oh no, you got to outdo the royalty where you can.
And since then, we also have hung out in an undisclosed location.
Yes.
You gave my partner some tips on crypto using your real Pavel Russian accent, which was really interesting to hear.
Yes, it was.
I'm glad that you put on a fake American accent for appearances on podcasts, though, because it helps the folks understand what you're saying, because accents can be tough. So I wanted to ask you, well, first of all, why am I all of a sudden broke?
Well, we got a little overheated, a little too quick.
Yeah.
To say the least. I mean, we had the worst liquidation event in Bitcoin and all of crypto's history.
Wow. Okay.
Yes. It was worse than the March of last year, the COVID crash from last year that basically brought us crashing down back to the very lows from the bottom of the last bear market. And there was more selling volume than there was then. It was a more brutal destruction of capital than we've seen yet. And we didn't go back to like super low. I mean, It doesn't, the chart doesn't look the prettiest right now. And as of right now, we're recording on June 14th. It is recovering right now. Actually, Bitcoin's back in the 40,000s, and it's looking like it wants to test the upper ranges here because.
And I remember, like, just for perspective, I remember just a few months ago, like I think it was New Year's Eve even, or maybe Christmas Eve. I was like, holy shit, Bitcoin is about to hit 20,000. Like it was a huge deal. So like just for perspective, like, so when you said the biggest, what did you say? The biggest sell-off in history? Was that the word you used?
It was the biggest. Well, it was the biggest liquidation event in history.
Event. Okay, so that does not mean the biggest like percentage drop or anything like that. Then is that right?
Overall, it wasn't the worst drop, but in terms of how quick it happened, and just where we were in the market cycle, it definitely is the worst we've seen in a long time. And I think it was the worst because now we have more leverage in the market. Because years ago, like back in 2013, 2014, and previous to that, we didn't have all these leverage platforms that we do now, where people can they can trade, on margin. They can take out. There's billions and billions of dollars on margin, and that's part of the reason why I think we got so overheated so quickly with this this cycle was that for the first time ever, we have a full cycle in the crypto market that has leverage, that has futures, that has options, that has these derivative markets that allow big players, to manipulate a little more, unfortunately, like traditional markets. And however, at the same time, it allows the insanity that is crypto to sort of dial it up to 11, even though, which it was at 10, which we thought that was as high as it could go, but then somehow it went crazier. But I think long term, and by long term, I mean like over the next few years, like this is just going to be seen as another normal drop. Because if you go back on the Bitcoin chart, like just long term in the crypto market cap, these massive drops like this, they happen. They don't happen with such quick severity like they do recently, where we got where tons of people just got liquidated. It was a bloodbath, which is why I didn't see it coming. And in hindsight, I'll finish off on this note. Maybe one of the richest men in the history of mankind going on Saturday Night Live to shill a meme coin was a bit of a local top signal.
Sure.
Yeah.
That's you have always told me that like celebrities, and Elon Musk is a celebrity.
Yes.
That celebrities really, really pumping stuff is sort of a sign that it's getting overheated. I think that maybe we saw Elon as like a sage rather than just another celebrity.
Yep. I think that was the problem, is that we saw Elon as someone who was not like Soldier Boy, who's out there tweeting about, some crappy NFT scam or something like that. He was talking about, he owns Tesla and SpaceX, these companies that, and yes, there's some valid criticisms of them and of him, but there's real things happening there. Like he's someone who's building.
And plus he's super autistic.
Yes. Which was, perfect for crypto.
Yeah. So I know that this is just what caused a lot of my stuff to be liquidated, and I know that you've told me this is pretty common, was my stop orders. They just kind of cascaded, or is it limit orders? I get those mixed up. But
these are stop limits.
Yeah. So the orders that basically are sitting there waiting for the price to drop to a certain level, kind of tend to cascade, and then so everybody's got their stop limits set, and so that in itself causes the market to crash. Is that right? Or
Yep. It's like, because as you use an algorithm to trade, and many more people use algorithms to trade, especially a lot of people with size, they use algorithms. So it's like a wave through the bots. And once that momentum, it just catches steam, it doesn't stop until eventually we find a point in the market where buyers step in and there's enough buying pressure that the price isn't really going down any further, which I think we might have seen hopefully here. This could just be a bounce. We could just be forming another short. Like if you look at the Bitcoin chart right now, just talking about Bitcoin, since that's, obviously, the most, that's the number one in terms of market cap. We'll talk about Ethereum and other DeFi projects here pretty soon. But if you look at the Bitcoin chart right now, it is forming what could be a head and shoulders, which is historically a bearish pattern in most markets. However, crypto functions a little weird, and in previous bull runs like this, whenever we have...
Real quick, to interrupt, a head and shoulders is kind of where it looks like the Wonder Woman logo, with like one kind of short part of a W, and then the middle of the W looks higher, and then kind of like someone shrugging their shoulders. That's why they call it that.
Yes.
But to me, it looks like the Wonder Woman logo. And this is in the price chart. This is just for the noobs listening.
Yeah. So if you just really zoom out, like if you look at Bitcoin on a really high time frame, like the weekly, the monthly, you can sort of see that forming. However, historically, if you go back in time into previous bull runs, you've had similar bearish patterns form on time frames like this, and we just keep pumping up from there. And I think there obviously is a bullish case, not just for Bitcoin, but all of crypto, especially right now, because of, inflation. I think the Fed, it was today or yesterday, the New York Fed came out saying that, food prices are up 8 or 9%. Housing, your average house price, not house, rent is up 9% by end of year. Just the average cost of living is going up, and that's what they're reporting is 10%. You now have El Salvador accepting Bitcoin as legal tender. They're in the process of accepting as legal tender. And there's obviously, there's some issues with the way that they're setting it up there, but I mean, long term, it's a pretty bullish case for the adoption of Bitcoin and just crypto in general. And I think that just literally with everything, the fundamentals are too strong for it to really just keep going down and enter a full-blown bear market like we saw at the end of 2017, from the end of the beginning of 2018 or so. It just doesn't really make sense that we actually that we're done for now. I mean, at some point we are going to have another bear market that sort of is built into the game, and the whole super cycle. I think I mentioned this last time I was on. The whole theory of the super cycle that was getting hyped up and has been trashed a little bit in the whole community, the whole crypto community recently, because everybody's been a little disillusioned with this massive drop, but I really think at some point we are going to see that super cycle, whether it's now or later. The whole fiat system just has to collapse.
Right.
We know as libertarians, as Austrians, that this cannot continue. It's impossible for it to. And I think, the whole this is off topic, but I was thinking about this whole recent thing with BlackRock buying up all these homes recently, these single family homes, and either that's some great reset stuff where they're trying to create scarcity of property so that it is harder for people to actually get ahead and own property, or possibly they could know something that we don't with the way that rates are going to be changing soon, and that because here's the thing, the Fed might have to take interest rates negative to save the housing market. Because I don't know, I forget, I don't know his full name, but it's Clint from Liberty Lockdown. He's been on, he's done, he's made a few appearances. It was on Part of the Problem and, Run Your Mouth and a few other podcasts where he was talking about.
He's actually going on Tim Pool next week, which is.
Oh, that's awesome. Yeah. I didn't know that. Yeah. But he's made some great points about how, the real estate market is just so, it's in a massive bubble. And where I live right now, I won't disclose where exactly that is, but I can tell you right here, just within my neighborhood, there's too many places that are for sale that shouldn't. They're not kept up. They're selling too fast. And I remember very well the bubble. My family, we lived through the bubble, the last real estate bubble when I was much younger, obviously back then. But I remember it vividly. I remember because we moved from one place to another, and our house that should not, in the place that we moved from was, I remember my parents and even I being I didn't know the exact value, but I later learned how much it sold for, and I was blown away because it was a piece of crap. And obviously, things are a little different now with the situation because it's partially driven. The bubble was definitely there before all the COVID stuff, but yeah, once they lift those foreclosure restrictions and eviction restrictions, it's gonna be bloody. And it's gonna be interesting to see how that affects the crypto market. Because I really think the people are gonna lose faith in a lot of these institutions that are backing this whole system that creates these bubbles that basically makes it impossible for the kids to move out of the house, to downsize, to basically make it for people to live normally. And I'm hopeful that this will allow people to sort of this will give us a narrative for DeFi and decentralized insurance to sort of step in here. Which I think if you want to start transitioning to this topic, we can.
Yeah, totally. Let's do it.
Yeah, I don't know about what I'm bullish on. But I'm really concerned with where that's going, and I think that concern is fueling a lot of interest from traditional investors, and I think we're starting to see that mainstream attention because people are aware that things are getting unstable again. But yeah, and I think that leads us into DeFi, which is
So why don't we start with ETH if you're okay with that?
Yeah.
Just kind of give a. I don't know. Have we talked about DeFi much with the two of us on the show?
I forget because we talk so much about it.
I know. I know we've talked about Link.
Yes, we have.
But why don't we first of all just kind of give a very bare bones description of what DeFi is and how Ethereum kind of powers it.
Okay. Yeah. So as many listeners probably are aware, but a lot probably also aren't. Ethereum is the second most valuable cryptocurrency on the market, and it differs from Bitcoin in the way that you can create decentralized applications on it. You can create your own cryptocurrency on it. You can create, and the whole premise of Ethereum is that you can create, and all the thing that powers all this is that it's smart contracts, that sort of enables you to create these advanced programs, like these advanced applications. And what you mentioned as what powers it earlier is the Ether currency on the Ethereum blockchain that is used as, the gas for all the other transactions on the network. And some developments with Ethereum that are coming up that's actually quite bullish for it. So, a lot of people have been criticizing Ethereum for going from proof of work to a proof of stake network, which means that unlike Bitcoin, and as they currently do now, they won't have miners validating transactions. They will have nodes that are run through staking of Ether, verifying those transactions. And this has gotten some criticism from the Bitcoin community and some more of the older people in the community who say that it's not really decentralization and that it's inflationary. The biggest criticism really is that it's inflationary and that it's not Austrian and that it's not good monetary economics. And it really doesn't have to be good monetary economics, quote unquote, because it's not a reserve asset. It's it's the utility for these. It's basically it's computing energy is what you're buying. And fortunately, now we have, I don't know, have you heard of EIP 1559?
No.
You heard of that? Okay, so next month, this is actually really cool. So this is the first step towards, Ethereum 2.0 launching. Is they are integrating, this new protocol into Ethereum called, it's EIP 1559, and they're going to start burning Ether on the network. So every transaction of Ether is going to burn some of that off. I don't know the exact percentage. So you're going to start seeing, Ether become more deflationary as time goes on.
Okay.
And there's going to be more there's going to be more. I don't know the exact, because I'm not, a lot of the projects I love are built on Ethereum, but I'm not as much of an Ether guy as, some others are. But there's a lot of other proposals too that are going to be implemented later on. So that's kind of exciting what's going on with Ethereum. But yes, so going back to, all the stuff that is built on Ethereum. So you can build these programs on Ethereum. And what DeFi is it's decentralized finance. And because Ethereum allows you to build, like all these blockchain applications, we've now been able to build things like decentralized lending, decentralized exchanges for crypto, decentralized exchanges for stocks, and also derivatives. And you're also starting to see, insurance crop up too. And that's sort of separate from DeFi, but it's kind of related to it also. But that's sort of a brief introduction to DeFi. We kind of got sidetracked with, Ethereum and sort of talking about what's going on there and what's happening there.
Sure. Well, actually, why don't we stick with that for just a minute? So a couple of other criticisms I've heard of Ethereum. One of them is that it's centralized. I think you touched on that for a second, but then like just now you kind of gave an illustration of that by, saying that, they're going to start burning Ether. I don't quite know what that means, but I know that that's not going to happen in Bitcoin.
Yeah. So because the way, in effect, because of the way that it's moving over to proof of stake, if there weren't any other alterations to the protocol, there would be an infinite supply and it would be inflationary over time of Ether. However, with the new, this is the first of many that are going to be coming down the line, but EIP 1559, and I think that's the correct way of saying it. I've only read all this stuff. I don't watch a lot of videos or really listen to podcasts. All I do is I read a lot of intense articles or tweets and threads about things. So if I ever say anything wrong, that's why. So what basically what I say about them burning is, so every transaction in Ether, part of that is paid to the miners that are validating the transactions. It's going to switch. Some of it still is going to be paid to the miners until it goes to a proof of stake network on Ethereum 2.0. But going forward, some of that ether in that transaction from that would go to the gas fees is now just going to be burned away. It's going to go to a wallet that nobody has access to, and it's going to be taken out of circulation. So in effect, you're deflating the supply of the currency. Now, it's still going to be increasing, I think, gradually over time for a little while, but there are going to be some deflationary, there's some other deflationary proposals that I've read about that are gaining traction. I don't know the exact, I don't know them well enough to talk about them, but there is some more stuff coming down the pipeline. I know that is positive for Ethereum in terms of decentralization.
So is the only positive to moving to a proof of stake model, is the environmental concern the only positives, or are there others?
Well, it's not really the environmental concern from a user standpoint. It's actually the fees. It's, because right now with proof of work, the benefit of proof of work is that if like with Bitcoin and currently with Ethereum, there's so much hash rate, aka computing power behind it, that it is secure and that any transactions or anything stored on the network, it's basically guaranteed. With proof of stake, if the model is, built correctly, and I think Ethereum will succeed here with Ethereum 2.0. And I think some other proof of stake networks will too, because they're not, again, they're not exactly designed to be money like in the same way Bitcoin is. I really think that, sorry, I'm a little dehydrated here. I think, I think that they're going to, a big reason for them switching over to proof of stake is it's really going to help with fees. Because right now, like as you saw over the past few months, whenever things were going crazy, the Ethereum network was pretty hard to use. It was hard to send transactions without paying a ton to do so. To go on Uniswap, which is the leading decentralized exchange, built on Ethereum, your average transaction was over $200 equivalent in Ether. So you had to be buying massive amounts of anything on there to make it worth it. And that was just to make a purchase. To withdraw from there was even more expensive too. And then it just, with proof of work, it's, again, like that's the kind of the problem. Whenever you don't have like that much, like, because as a network grows, proof of work, it does become more efficient. The problem is with Ethereum, it's designed to be used not as money, but for like computing power. So it becomes highly inefficient to be using proof of work for, to query things on, like, just for basic computations, for anything built on it. And, I think proof of work will, with the things that they've implemented and are going to implement, I think it will succeed. But yeah, that sort of is the main complaint. And that's sort of the main benefit though. The main complaint from people is that, but I think the main benefit is that you're going to see a massive reduction in fees across the network. And it's become, going to become a lot more usable for people who, the barrier to entry is going to be lowered, I think. That was kind of a rambling explanation. Sorry about that.
No, it's great. So, I mean, we've got an hour, so
Yeah.
Rambling is perfect. Another criticism I've heard of proof of stake is that it kind of causes a caste system where in order to like prosper as a holder of a proof of stake token, you have to already hold it. Whereas with proof of work, anybody with a computer conceivably can do it.
Well, yeah, the same criticism could be said for proof of work though, because, with Bitcoin, I mean, it's a lot harder to mine Bitcoin now for your average consumer than it was, a decade ago. You need tens of thousands of dollars, in space and GPUs and electricity now to profitably mine Bitcoin, to do that. And now, your average person can't do that. And I mean, yeah, there's other, hypothetically, there's other coins you can mine, but if you want a network to truly be decentralized, there's always, as time goes on, as values created by the network, there's going to be less opportunities, I think, for, anybody, whether it's proof of work or proof of stake, to be able to profit off of it in some way.
All right, cool. So okay. I think now you have my permission to go on to the other stuff that you wanted to talk about. Let's get into DeFi a little bit.
Oh yeah. Yeah. So DeFi is, again, it's decentralized finance. It's all, it's in the name. It's decentralized applications, for finance built on Ethereum. You've got exchanges, you've got lending, you've got all sorts of cool things that are built on it. The projects that I am most bullish on, and there's not many. I mean, there's a lot in DeFi that's really cool and exciting, but my focus is, I'm very focused on the very basic fundamentals, because right now, if we're going to see growth in the sector, you need to get the very basic things right. You need, basically all the things I said right. You need lending, you need exchanges, you need the plumbing to be working before you can start building the really nice houses on top of it. And what I'm bullish on, there's just a few projects, like, for example, synthetics, and the price action across the board on all these hasn't really been that beautiful lately. DeFi has just, as a sector in crypto, especially because we've seen a lot of downside the past few weeks and months. DeFi has been getting kicked in its ass. I think at some point here pretty soon, that's going to turn around. Let me look at the chart right now. Let's see if I'm eating my words. No, things are looking kind of decent right now overall. Bitcoin's still above 40,000, so hopefully, I haven't shot myself in the foot just yet.
Synthetics is on a okay trajectory. It looks like. I mean, it's approaching $10, which is about where it was when you told me to buy it a month and a half, 2 months ago. So
because I thought I didn't see this. I didn't see this coming. Nobody did.
I know you didn't. I'm just giving you shit.
Yeah, I know. No, I know. But I feel so bad about that. I mean, I lost a lot of money too on that unrealized.
Yeah, dude,
money,
you probably lost more money than I have. So
maybe
perspective is important. So
yes, it's true. Yeah. But yes, anyways, but so synthetics. Yes, synthetics. Here's why I'm bullish on DeFi though. And here's what I'm bullish on. Synthetics is it's a decentralized stock exchange essentially and derivatives platform. You can tokenize stocks and put them on the blockchain. So, recently we've had all this stuff happen with, AMC, with GameStop, and all this shit with Robinhood. They, as halted the trading. They stopped retail from screwing over, all the hedge funds, all the, the buddies of big government, and retail, of course, in the end was left holding the bag. I haven't really followed the AMC thing as much. I think it might be doing slightly better than GameStop, but still, this solves that, because with decentralized finance, with an actual decentralized stock exchange, you can't turn off the trading. You can't stop people from taking the trades. If there's somebody on the other side of it willing to take the other side of a trade, it's going to happen. It's baked into the protocol to be fair to everyone. And I think that's one narrative I think you have right there. That's really important.
What makes something like that attractive to the corporations that are listed on the stock exchanges? Why would a company want to switch to synthetics over the NASDAQ or NYSE?
Well, because it cuts out a lot of the middlemen between them and investors. Because hypothetically, and I'm sure at some point the SEC or some other regulatory body is going to step in. But hypothetically, right now, and you would need obviously the permission of the governance council on synthetics, which is, again, it's run through decentralized governments, most cryptos are. And if you want to list directly on there, if say somehow your company, you can't get listed on NASDAQ or New York Stock Exchange. If you get their permission to list there, you could hypothetically launch, your stock on their exchange. You could just list your stock on their exchange, and I mean, if it truly is a decentralized exchange, where you could just list anything, you could just literally put your stock up there if you want to. You could go around all these other middlemen who get a bunch of money from you, who have lawyer fees, and just go directly to the consumer, and that's why at some point, I think we're going to see regulators try to mess with this. But, again, that's kind of the problem. It's global. And I think, you're going to see, there's going to be a game of cat and mouse, I think, at some point. And, maybe in the United States and other countries, I think there could be serious regulatory action, but at the same time, there's going to be countries like El Salvador who are like, hey, this is a great opportunity. We're open for business. And all that capital is going to flood to them. All these other countries are going to miss out on it. They're going to have to figure out a way to bend the knee, basically, to these protocols that are super profitable for these other jurisdictions that are promoting, decentralization.
I think probably I was thinking too parochially in that question and thinking that like Google was going to jump ship off of whatever exchange it's on right now and switch over to synthetics. But really what synthetics provides is an opportunity for smaller upstarts. And really, I mean, the stakeholder capitalism thing, for all its faults, I would imagine that something like a decentralized stock exchange would be attractive to some of those more woke companies, especially the ones that are just getting started.
Exactly. Yeah. Because and I'm sure, at the same time, there's going to be some people, obviously from the woke side that would go, oh, it's not actually protecting people because there's no one to stop them from making the mistakes. And, that usual, elitist crap disguised as
one would hope that the Occupy Wall Street people haven't become so brainwashed by what's the word? Cathedral, I guess, that they would see through those arguments. And undoubtedly, you're right. Some people will buy into that. But
yeah, I mean, if you want to talk about that real quick, a lot of people on the left have bought into the whole, crypto's destroying the environment narrative. And the Cathedral is doing their hardest to promote that with them because they see it. They know it's a threat to them. They know that if the real lefties, if the real people like on the left saw what this could do for your average person, like your average working class person, like this could really set a lot of people free. This could actually create, we could see more steps towards, worker-owned companies or worker-controlled co-ops or whatever. This technology, ironically, while it enables a lot of capitalistic things, also enables them to do a lot of things too. And I think that's the greatest threat to the Cathedral, is if they realize that this isn't actually destroying the environment and, that it's actually good for them. But, of course, that's the Cathedral's greatest talent, is tricking the left, with other things and sort of putting one thing in front of them and distracting them with it when there's something way worse behind it.
Yeah. Well, and just to, I mean, I'm guessing that most people don't really care who are listening to this show, but just to add a little bit of meat to the bones of this environmental concern, I haven't confirmed this, I guess, other than just from other Bitcoin fans. But you told me that some super high percentage of Bitcoin are actually mined using renewable energy. And also, it's mined in places where energy is cheap. It's not like it's Centerpoint Energy or Excel Energy up here in the Twin Cities or whatever. That's bearing the burden of this. It's the guy with what, a solar panel or battery array or something like that.
Right. Yeah, I think I originally told you, and this was the number that was going around, it was roughly 70 to 75% of all Bitcoin was actually produced with green energy. So it wasn't actually 70 to 75%. So 70 to 75% of all the miners and validators, like all the people that contribute to the Bitcoin network, use some form of green energy, either entirely or sort of like a hybrid system where they get some from fossil fuels and some from green energy. And it's actually somewhere close to, in total, 40% of the Bitcoin network is powered by green energy, which is still, that's a huge percentage. Like 40% of Bitcoin is green energy. That's huge. And Elon Musk is saying like, oh, not till over half of it, is clean. Will we accept it again for payments? But, then again, who's really going to want to pay the greatest, appreciate, like the most appreciative asset over the past decade for one of the most, historically depreciative assets, which is a new car. I would never pay for a car with Bitcoin or any other crypto unless it was, I was confident we were at some cycle top and it was, a good time to unload it.
Yeah.
But yeah, sorry, what were you going to say?
I think I was going to say, like, I probably wouldn't pay for much of anything with Bitcoin right now, other than maybe other tokens, really. And even that, I mean, I've done it, but it's probably not the wisest thing in the world. Okay, cool. So that's Synthetics. Is there anything else you wanted to say about that particular project?
Yeah. Well, just, I think we kind of covered Synthetics pretty well there. There's also Aave, which is, it's all crypto tokens right now, but it's decentralized lending.
And that's AAVE for people who are interested in looking a little bit digging a little bit deeper into it.
Yes. Oh, also back to Synthetics. That's, Synthetics with an X at the end. So it's SYNTHEETIX, I think. You'll put it in the description.
Yeah. It's SNX is the symbol that they use.
Yes. And then Aave is AAVE, and then it's the name is the ticker. So yes, this is a confusing conversation the more I think about it. But so Aave is decentralized lending, and you can use that for margin trading. You can use that for anything. Right now, it's only crypto, but going forward, it's you'll be able to use other assets on it as well. And I think that's again, it's just very basic. Basically taking out at some point, if we're able to do all lending or most lending through blockchains, where you're able to get a competitive interest rate with a bank and you don't have to deal with a bank, that's going to be great. And also, the fact that you can basically, for whatever reason, like if you need a loan for anything, you could hypothetically do it through them. And just anybody, because that's the thing with decentralized lending services, like anybody can, as long as there's capital there and, the contract is, viewed as good by you and the other person, you can take it. And the fact that now this whole basically the cathedral's whole their biggest corporate friends, which is the whole banking system, which is tied to the whole Federal Reserve System, and the whole financial system is just basically they're gonna have to accept it at some point, because it's gonna create higher yields for their customers, and ultimately they need to follow their customers. But that's really why I'm most excited about that. So there's that. And then as far as exchanges for crypto right now, there's one, and some of the Austrians and some of the more economics nerds will probably pick up on this, but it's called Bancor, which actually the name comes from Keynes's original idea for a world currency called Bancor. Oh. But I know, ironic. But it's actually not anything like that. It's it's a decentralized exchange for crypto. And it's, and that's the area that I think is sort of going to be the most crazy for DEXs coming up. For DeFi coming up is DEXs. It's decentralized exchanges. I think that's the area it's going to have the most growth, because that sort of is the base framework that we're working with right now. Is just we're still working on just decentralizing crypto exchanges, because we still rely on Binance and Coinbase and Gemini and all these other ones.
And all of those places require know your customer verifications and things like that. And if you want to get on the real Binance exchange in the United States, you have to use a VPN and pretend like you're in another country. Luckily, you're in Russia, so you can do it. But for normal people like me, I mean, I don't know if that's strictly speaking illegal, as long as I report it to the IRS and all that, but it still feels kind of shady. So, I mean, doing this stuff above board on a DEX is attractive to me, except that every time I've ever used a DEX, my fucking gas fees were, almost as high as the exchange.
Exactly.
The transaction, rather.
Exactly. And that's, again, like with Bancor, that's the sort of the whole idea behind it, is that it's a low gas, DEX that, is also at the same time has good tokenomics for holders and promotes growth of it, and that's why I like Bancor. However, you have other exchanges that are doing really cool stuff too. You have SushiSwap, you have 1inch. There's a lot of activity happening with DEXs. My horse is just Bancor, and I think you really right now it's hard to go wrong with any of the top DEXs. as a hold for the cycle or for the next few years. Cause like I really once that really sort of is the next key area for DeFi to break. Cause if we can get, crypto to be, because, crypto is supposed to be decentralized. If we can sort of break this one problem that has unfortunately popped up and has begun to plague us now with centralized exchanges, if we can finally, if we can fix our own damn problem, I think that can really sort of get these other projects moving for these other sectors in finance too. I think with synthetics, with Aave, and then we can start building from there with a lot of other things.
So is Bancor for you just that's the one that you heard about and got excited about first, or is there a reason that you prefer it over some of those?
It's tokenomics. It's purely the tokenomics of it, within the way the governance council works. And I could get into that, but I don't think anybody listening would really understand or care to listen, because it's just it's a lot of it's technical.
Well, as long as you know my audience better than I do, let's get on to your next favorite thing.
Yeah, but no, but I do like the tokenomics of it a lot, and I think going forward, it's the most stable and decentralized for a DEX.
Okay, cool.
Yeah.
But before we get on to the next thing, can you kind of define tokenomics?
Yeah, tokenomics are just, depending on whatever your network is designed to do, it basically just means is the way that the flow of tokens, the way the nodes, the supply of the tokens, is it all situated in a way that will work? That's sort of tokenomics. It's like economics, but it's sort of okay, is there going to be a good flow here of the actual native token on the network, and are we actually going to be able to use this token to achieve the stated goals of the network? Mm-hmm. And if a network has good tokenomics, then it will succeed. And that's why, obviously Bitcoin has amazing tokenomics. It's why it's sort of marketed and it has become sort of digital gold. It's the ultimate reserve asset. And I think Ethereum has really good tokenomics, and they're changing their tokenomics, but I think, it's really more of an evolution than a change. And I think it'll be a successful move.
Well, I would say switching from proof of work to proof of stake is more revolutionary than evolutionary.
I think it's evolutionary because it's a big step, but then again, creatures going from if we're not within the pure creationist 10,000 years standpoint, but creatures went from water to land. That was a revolutionary thing, but it's evolutionary. I just think Ethereum taking the step to proof of stake, I think it was inevitable, because again, I think proof of work is great for a monetary system, like Bitcoin, but proof of stake is better for, a utilitarian blockchain.
Yeah.
Network.
Do you think that's kind of the fundamental misunderstanding that Bitcoin maximalists have, when they say that Ethereum and the projects that are built on it are scams or whatever, inflationary or never going to work, that kind of thing?
I think so. I think a lot of them, because they came from, they came to the space a long time ago when there wasn't, DeFi and smart contracts weren't really a thing. I think that they come at it from the wrong angle. I think they come at it from this, we're trying to, we're still trying to find a reserve asset. We're replacing the dollar. We're replacing fiat currency. We're gonna, this is what we're building towards, a future where we're going to transact everything in this, and they're not thinking of it in terms of, oh, hey, blockchain is a tool beyond just monetary policy. It's also a tool to decentralize, like I said, finance, decentralize insurance, decentralize all these other things. And I think they're missing the, I think is the saying they're missing the forest for the trees?
Yeah. Something like that.
I think it's that's what it is. They're missing the big picture. And I think a lot of them also, because to be fair, a lot of them made agree. Buying Bitcoin, a decade ago, or before 2016 was an amazing move, and I think a lot of them are, they're kind of still smelling their own farts of oh man, I made this amazing decision and there's nothing else that can be better than this. Sure. And Bitcoin's amazing. Bitcoin is one of the greatest creations in the history of mankind, but there's it was the beginning. It wasn't the end of blockchain. It was the beginning. And I think it's going to be here to stay. But yeah, it boggles my mind really that you could not see these other creations on blockchain and be like, oh, sure, this is awesome. This is going to benefit decentralization, humanity. I don't get it. And I think a lot of it is very like, it comes from a well-meaning place of like, oh, I'm trying to prevent, like something that's, it's not really generating real value and there's nothing that's going to come from it. But at the same time, it's kind of this boomer mentality of, oh yeah, my stuff was great, but what comes next? Oh, that nothing else can be good. It's sort of that, that old man shaking fist at the world thing.
What do they, what do they think is going to come? Do they think that basically decentralized finance is just never going to take off, and so people are going to be doing their financial, like everything, contracts and
for a
insurance
long time,
and all that, the same way they always have, just with Bitcoin instead of fiat?
Well, for a while, the narrative was that you don't need DeFi. With some, for some maximalists at least, like the narrative was, oh yeah, we don't really need this. Bitcoin solves all those problems because we oh yeah, we can have all these institutions, and they'll just be using Bitcoin. They can't do anything. But now the narrative has shifted for the maximalists, saying that, oh no, DeFi is awesome. DeFi is great. These services are awesome, but we're building it on Bitcoin. And it's honestly it's a self-defeating argument, because if Bitcoin is supposed to be, the ultimate settlement layer that's designed to be, digital. and early, the people that split off, your Vin Armanis of the world will disagree with this, your Bitcoin Cash people, that, it's not supposed to be digital gold and this, ultimate reserve asset, but that's what the maximalists, have treated it as. And it's stupid to build DeFi then on Bitcoin, because you're basically hogging hash power and Bitcoin, away from the network, and you're using it it's stupid, really, in my opinion. I don't see it. Like it really is a religious fervor, and it kind of is like this cult that's formed around, Bitcoin. And, not to say there isn't, some well-founded reasons for it, because like I said earlier, Bitcoin's great, but it really is just this illogical religious devotion, and I think you see a lot of this more. I think it's more blatant with altcoins, because they haven't succeeded. Yeah, you have groups like I'm in, like the Link Marines, but I think, for example, look at Bitcoin Satoshi's vision. Obviously that's starting to fail, but for a long time you had some real cultish behavior behind that. There's something about crypto, and I think it's because people it's technology that has significant potential and promise, and two, their finances are tied up in it. I think that it creates it creates the perfect conditions for fanaticism.
Yeah. Well, yeah, and right now, given that we're kind of entering an era where everything is religious, Vin Armani calls it the dim age and the new age of magic and all that stuff. That's just, I think, par for the course in any kind of big world-changing project or movement. Is you're just going to see that religious fervor no matter what, whether it's Trump and QAnon or the COVID hysteria or cryptocurrency. That's just kind of where we're at. Even hell, look what's going on in the LP right now. Even libertarians are prone to it.
Yeah.
What's your next project that you're excited about?
Oh man, there's nothing really too new on my radar at the moment. Mm-hmm. I've just been focused on surviving. I've had some other things come up in real life that I've been a little more focused on too. Yeah. As we discussed. Yeah. But other than that, I'm focused on trying to just, hopefully if we're actually getting a reversal here today and throughout the next few weeks into, I'm hoping by midsummer we're going to be back in the full swing of things, because, trading was on easy mode for a long time there.
Yeah.
As you got to see, and I'd really like that to come back. That'd be nice. And I'm just focusing on trying to, if that doesn't come back, I'm just focusing on trying to survive through the chop of the market.
Sure.
Because I probably should be doing more research right now and trying to dive in deep on what what else there is. But like as far as like my cycle plays that I've sort of picked, I'm kind of like there.
Yeah.
Kind of at where I'm at. So like basically there's none of this is financial advice, of course, anything I've said, and anything I'm about to say. But what I'm interested in, obviously, like here's my overall list is, besides Bitcoin and Ethereum, I think Chainlink is great. Synthetics, Bancor, Aave. Ren's another one that it's kicked my ass. Unfortunately, if you want to gamble on a privacy token, that's a decent one to maybe look into. But yeah, I'm just focused on Chainlink really and DeFi. That's really my area of excitement. That's where I'm most excited, and I'm just trying to trade it right now because I think that if we can sort of pull off a 2030. This was my mistake and a lot of others. We were comparing this whole Bitcoin crypto cycle to 2017's when really we should have realized it's going to be its own thing. And, now I'm in hindsight, I'm, maybe now this is going to be like a 2013 cycle where, it's a double bubble where in the first part of the year we go crazy like this, cool off a little bit and then come back stronger, towards the end, which, I sort of, like I said earlier, the fundamentals are just, the narrative is too strong for Bitcoin and crypto and DeFi. It's just, they're literally just they're not even printing them. They're just typing them out on a screen and saying, oh yeah, we have more dollars now. I think it's inevitable whether it's happening now or in the next few years, it's going to happen.
It's a little bit scary.
It definitely is.
Talk just a little bit about Link and what they've been up to lately. I think they just reissued a new white paper, right?
Yes, the white paper 2.0 came out. If anybody wants to read that, you can go find it on chainlinklabs.com. Or if you want to go find Chainlink God's podcasts on that, he had a great one where he really got in depth on that.
Oh, cool.
Yeah, what's going on with Chainlink though? They're just, Arbitrum launched, which is, that's another Ethereum-based proposal. They're backing that. There's Keepers, which is, that's a security thing built on oracles. There's a lot of technical stuff going on right now. Nothing really of interest to your average, user or consumer.
Okay.
But it's still plugging along. Price action has unfortunately not been as nice as I want it to be lately. But then again, that's the whole market. I'm still super excited on it going forward. Recently Sergey Nazarov went on Lex Fridman though. So if anybody, wants to listen to that, I highly recommend, listening because Sergey, is he's the co-founder and CEO of Chainlink. And, there's a conspiracy theory and there's, I think some evidence for it that he might be involved with the development of Bitcoin, might be one of the people behind Satoshi, but that's just wild speculation, and you can look into that on your own.
Yeah, I did see that Link is getting into video games. Have you seen that? And do you know anything about it?
No, I have. Oh, is it the verifiable randomness you're talking about?
I don't know.
Oh, I have not seen this.
All right, cool. Well, maybe bring it next time you're on the show. You can do a little bit of research because I, like you, I obviously had never heard of it before you brought Chainlink to my attention. But I think it's a really exciting project. I think it's pretty cool. I do some dollar cost averaging, just every week, deposit a little bit of money into 3 different coins, and it's always Bitcoin, Ethereum, and Chainlink. So, that's actually been keeping me in the green this year. Even the last couple of months, I'm still profitable. Ever since I started. So that's good.
Good. I'm glad. Yeah.
Not just doing trading, which I was cautioned against by everyone I know the first time I talked to you. So,
but overall, yeah. So overall though, trading has been I know it's been more difficult lately. The bot has bled a little bit, but Overall profitable venture?
No, I'm in the red.
You're in the red now?
Strictly on the trading account, yeah.
Oh no,
I know.
Oh, I'm so sorry.
Nah, it's cool. It'll bounce back. We're good. It's been more of an experiment than anything. I was able to bail myself out a little bit, just by when it was starting to look bad. I put almost everything into Bitcoin and Ethereum.
That held a lot better than everything. Yeah.
Yeah. So they're doing like my overall value is down, but still is up from. It's down from my highest amount, but it's still up from when I first started investing and trading, in November or December or whenever it was.
Yeah.
So we're good.
Yeah.
We're good.
It's all about timing though. So, and you were investing at you were starting to buy at the perfect time. And then you started, trading, I think, unfortunately we were getting a little overheated, but
it's cool.
Mean, when you're in a bubble, you don't know.
Yeah. And you live and learn. I mean, that's the kind of thing about, I hesitate to call it straight up gambling, but it's kind of like it.
In a way, it's like poker.
Yeah,
like there's actually a game to it.
Yeah, there's skill to it, but also there's a pretty good amount of luck. Well, anyway, you got anything else to talk about on your bullet points or notes or anything like that, or do you just want to plug your social media and stuff?
Trying to see, is there anything else here? No, I think we covered everything that I want to talk about. Yeah, thanks for having me back. Everybody go follow me at Pavel Trades on Twitter.
Cool. I'm
toying with the idea of maybe having a podcast soon. I asked you briefly recently about what you use, but I'm not sure. I'm not sure about that. We'll see. I might do that. But in the meantime, you can just follow me. I don't really post anything of too much importance right now. I just shit post mostly.
Yeah.
But if you have any questions or anything, you can DM me. Again, at Pavel Trades on Twitter.
All right. Awesome. Thanks, Pavel.
Thanks again for having me back, James.
See you later. All right. Thanks once again to Pavel for joining me today. And thank you, as always, for tuning in. Don't forget to support our sponsor, Juliet Nail at buenterprises.com. She will teach you how to use your body right. And also, if you haven't already, head over to blackbird.substack.com. Sign up with your email address so that you never miss an episode of this show or written content that I produce. And as I have been promising for a very long time, as my audience grows, the market for premium content will be growing as well. If you want to get in on that game even earlier than everyone else, sign up for one of the paid options at blackbird.substack.com. More and more premium stuff will be coming out by the end of this year. I also appreciate you sharing the show with your friends so that we can get the word out there. If you have anybody in your circles who you think could benefit or might just enjoy this content, then be sure to let them know that I exist. Thanks again for tuning in, and until next time, live free.